Good evening to everyone. It's a great pleasure for us to be here in Riga and to welcome Vice President Dombrovskis to be here tonight to address his speech to the covered bond community here meeting in Riga. There are several reasons why we are in Riga. First of all, I think it's very nice to be here and to celebrate the conclusion of and the approval of the covered bond package. We know that Vice President Dombrovskis spent an entire night to find the final agreement, and his personal commitment to this dossier helped to have the final agreement, political agreement, which is an important step forward. This industry wanted to be in Riga to celebrate several things. We wanted to celebrate, of course, the approval of the covered bond package, but also to celebrate the start of a new year and celebrating the 250th anniversary of the covered bond product, started not far away from here, in the eastern part of Europe, was the countryside of Katowice, where the Prussians have introduced the covered bond model for the first time with the Pfandbrief model in Prussia. It was a long journey, started from Katowice and arriving today in Riga. There are also other reasons to be here in Riga. First of all, the Baltic region has decided to do a very challenging experiment to introduce 3 different legislation to boost the capital markets union here in this region and to commit to the finalization of the project of the European Union to develop capital markets in every single country in the Union. We hope that covered bonds will help this target, and we are very glad to see activities on the covered bond market in Poland, in Slovakia, in Romania a few weeks ago, and more to come. In Estonia, they have already adopted the covered bond legislation, and we are on this way also in Latvia and in Lithuania. We are very glad to be here, and we consider the Capital Markets Union is the continuation of the dream of Jacques Delors of building a single market. Because the real challenge for all of us is to transform the European Union as the biggest opportunity for every single European citizens and ensure movement of capital, people, and rights around the Union. And we can build this only by building a capital markets union and providing a solid asset class as a basis for the capital markets union. Thank you very much, Vice President, to be here with us tonight, and the floor is yours. Thank you very much.
Ladies and gentlemen, it's a pleasure to welcome you all here in my hometown, Riga. And I'd like to thank the European Covered Bonds Council and Secretary General Luca Bertolo for inviting me here today. Covered bonds is an industry with a proud European tradition, and I would even look for the roots of this in a more ancient history. The asset class itself has roots in ancient Greek mortgages and Italian and Dutch bonds. And actually, exactly 250 years ago, in 1769, the Kingdom of Prussia issued its first covered bond. So nearly every European country established covered bond system in the century that followed. And today, this success continues. At the end of 2017, there were more than 2.5 trillion euros in outstanding covered bonds globally, and European credit institutions are global leaders in the market. This is why covered bonds is an important part of the Capital Markets Union, our flagship project to build a deep and liquid single market for capital in the EU. So tonight I would like to give you an update on the recent progress by the European Commission in building the Capital Markets Union. Then I would turn to our proposal of last year for a harmonized EU framework for covered bonds. And finally, I will focus on the role of the financial sector in transition to the climate-neutral economy. So, ladies and gentlemen, covered bonds illustrate many benefits of the Capital Market Union. First, covered bonds demonstrated their reliability and stability during financial crisis when other funding sources dried up. Likewise, Capital Markets Union will increase the ability of the financial system to absorb shocks by diversifying access to funding. Second, covered bonds help banks provide large amounts of financing. In fact, more than 1 in 4 mortgages in continental Europe were financed using those instruments. And in the same way, Capital Markets Union aims to boost investment in jobs and growth by creating a genuine single market for capital in Europe. In particular, capital markets are useful for small and innovative companies to access risk funding, and many tech startups here in Latvia is a good example of that. And third, covered bonds are a safe and high-quality alternative for investors. So promoting new investment opportunities is also an important objective of the Capital Markets Union, so we see how well the covered bonds initiative fits in the overall frameworks. All these benefits help to explain why we have been working full steam to put in place the building blocks of the Capital Markets Union, and recently we had a major success. Out of 13 proposals put forward by this European Commission, 11 have been agreed or adopted, thanks to the good cooperation with the EU member states and the European Parliament. For example, we have agreed on the new standardized European products for securitization or personal pensions. We have clarified and simplified rules for companies, whether on the public listing or SMEs, early restructuring, or the European Market Infrastructure Regulation Framework for derivatives trading. These are just some examples on how Capital Markets Union will create deeper and more integrated capital markets in Europe. And in turn, this will lead to the stronger economic and monetary union. This will help the EU to deal with the challenges of Brexit, whatever form it ends up taking. In fact, Brexit only makes the case for Capital Markets Union stronger and more urgent. So I count on the next European Commission to continue to champion this project. Let me now turn to our proposal for the EU framework of covered bonds. I'm very happy that this has been adopted by European Parliament just last week. The aim of this proposal is clear: to establish a pan-European market for covered bonds based on high-quality standards and best practices. This will help to develop this asset class as a stable and cost-effective funding source for EU banks, especially where markets are less developed, but it will also set the standard for covered bonds globally. We estimate that potential savings for borrowers would be around 1.5 billion euros a year. At the same time, we are fully aware of the importance this funding source has for banks in some member states, so our proposal would not disrupt well-established and functioning national markets. Following the European Parliament's vote on covered bonds legislation, next steps will be adoption by the Council and publication in EU's official journal. Then it will be up to all EU member states to transpose the directive into their national laws. The legislation also commits us to review the case for a specific framework for European secured notes. Secured notes have clear potential to finance the real economy and to contribute to the CMU, but the use of SME and infrastructure loans as an underlying asset also makes them riskier than covered bonds. On our side, we have been addressing the case for European secured notes extensively since 2017. We have now advice from the European Banking Authority, an external feasibility study, and the input from an industry itself. This provides a very good basis to launch a potential initiative on this, but it will be for the next European Commission to decide. When we are talking about covered bonds, the location of this conference is very fitting because Latvia is working with Estonia and Lithuania to develop a pan-Baltic framework for covered bonds. The goal is to have covered bonds laws that are as similar as possible, and the underlying assets from any of these countries to qualify as assets backing them. So to achieve this, they are using the new EU rules as a blueprint. This pioneering project is part of the broader agreement among the three countries to create preconditions for pan-Baltic capital markets. And the Commission is backing this ambition by providing technical support. In fact, this has been one of my priorities as Vice President of the Commission. I believe that by interconnecting their capital markets and developing them together, Latvia, Lithuania, and Estonia can better attract capital, can help their companies to grow and create new jobs in the region. And the Commission will continue to strongly support cross-border initiatives such as this. And this brings me to the final part of my speech, which is on sustainable finance. Given the urgency of the climate change, we need to swiftly transition to the climate-neutral economy. And the financial sector's contribution to this effort will be critical. This is why we adopted an action plan last year to steer the financial sector in a more sustainable direction, and we followed this by 3 legislative proposals. The European Parliament and Member States have recently agreed on proposals on sustainability disclosures on investment managers and EU standards for low carbon benchmarks. But Member States still need to make progress on our proposal for green taxonomy, so we can reach a deal at EU level by the end of the year. This is important to give clarity to those investors who want to seize the opportunities of the transition towards climate-neutral and environmentally sustainable economy. And energy efficiency will be also an important part of this taxonomy. In the EU, more than 210 million homes were built before the year 2001. Bringing this housing stock up to the new energy standards will require major investment. The good news is, however, that when a home becomes more energy efficient, its value usually goes up and heating costs go down. In turn, this could reduce the chances of a borrower defaulting on the loan. Actually, we are currently assessing the evidence on the link between energy efficiency savings and mortgage loan performance. So I welcome the work on European Mortgage Federation and the European Covered Bonds Council to develop energy-efficient mortgages. And we will be learning from your experiences to see how to promote green mortgages at European level, also in the framework of the Mortgage Credit Directive. In the Commission, we also believe that the prudential framework should better reflect the risks associated with climate and other environmental factors. Prudential rules could favor green investment and loans, of course, keeping prudential considerations in mind. Another welcome development is the deal reached at the EU level in December to incorporate sustainability risks into banking sector prudential rules. Large banks with listed securities will be required to disclose sustainability risks as of 2022. And the Commission will also publish revised guidelines on non-financial reporting by this summer. The European Banking Authority will develop tools to enhance the capacity of bank supervisors to review sustainability risks. This will go hand in hand with a major effort by European banks to improve their risk management processes in relation to sustainability. And the European Banking Authority will assess the possible introduction of a more risk-sensitive capital treatment of green assets, or so-called green supporting factor. Any dedicated treatment of green assets would have to be fully consistent with the upcoming EU taxonomy. So, ladies and gentlemen, to conclude, with all these developments taking place in the world of covered bonds, their status at the heart of the European finance is secure. In fact, I believe there is significant potential for further growth and as part of a more sustainable future for the financial sector. So I count on you to make out the most of this potential. Thank you very much, and I wish you a very successful conference.
Vice President is so kind to accept a few questions from the floor. And I don't know if there are few questions following from the discussion that we had today on the steering committee that could help to show the commitment of the industry to reach this challenging task to improve energy efficiency in Europe and also to make the covered bond space even more secure if it's possible, considering that we never had a default. So.
Hello, Mr. Dombrovskis. My name is Nick Allon. I'm chairman of the steering committee of the ECBC. And I'd like to say that we're very honored to have you here today, and thank you very much for your speech, as well as for all the work you have done for the covered bond file in Europe so far. We are very pleased with the outcome of the directive. A lot of work has been done in that respect, but also a lot of work has to be done going forward. Today we had a steering committee meeting, and there we have decided to establish a task force with the target to implement for the implementation of the directive. So as the ECBC, we have in the whole process of the directive acted as a supporter and a knowledge and a think tank of the covered bond market. We could continue to do that so with the establishment of the implementation task force, we'll support the implementation of the covered bond directive and regulation. And my question is, how do you view this, and where can we help the Commission or the Parliament or the community in total also with this task force?
First of all, I would like to thank you for your work and for promoting also EU covered bonds framework. I think your work on supporting this initiative on awareness raising of importance of covered bonds has been facilitating this agreement, and I think now, as I outlined, the next step is adoption by the Council, but we wouldn't expect any issues there, so it's more like a formal step. So by June, probably even May, June, it should be done. And then it's a matter of implementation. And then, of course, speedy and proper implementation in EU member states legislation would help. So I think it also would be important from your side to work with the member states so that this directive is properly transposed, that member states realize the potential. And on this, it must be said that the situation we know across the EU is relatively uneven. There are countries, probably the prime example being Denmark, which are, all over the place about covered bonds, and there are countries where covered bonds are still a relatively peripheral issue, and probably there's not much realization on the potential which they could provide also for, so to say, freeing up bank balance sheet for financing of the real economy. So there, your work on awareness raising in those member states would be very much welcome. And I already mentioned, for example, this Pan-Baltic initiative. Also here, I think covered bonds still have potential for development. And the very fact that currently also the legislators, the governments in 3 Baltic states are taking this initiative, willing to create this Pan-Baltics market is a good step forward, also in terms of scale. So from your side, I think you just need to continue what you are already doing, and so to promote and push this framework and raise the awareness among different stakeholders.
Mr. Dombrovskis, my name is Colin Chen. I'm currently the chairman of the ECBC Global Issues Working Group. Definitely not European or EA, but representing the global issuers. The the ECBC, and through the work of the ECBC, we've been working with global issuers as well as global investors with the acceptance of the European issued covered bonds. We have been advising new jurisdictions with the technical expertise on legislation for the new issuing jurisdictions. But for the existing jurisdictions, we are also working with them to review the current legislation against the new package. The question is, can we seek your views and advice as to perhaps the timeline in terms of expectation that we might be required to comply and conform and perhaps for equivalence at some point to take place?
On this question on equivalence, I think the timeline is outlined in our legislative proposal. Well, currently, since we are setting a EU-wide framework, so the first step is to establish it as an EU market. So currently, nothing is really changing in terms of equivalence. Well, we are not having specific equivalence provisions, but we are also not restricting anything to compare with current situation. So the idea is then that we would have a review in 2 years' time once this framework has been in place to see how it has developed. So it's on one hand general review, but specifically it would also assess the case for introducing equivalence provisions. So it's indeed already foreseen in the current proposals that we would be coming back to this issue in 2 years' time.
Allow us to conclude and to say bon appétit to all of you. I would like to conclude with a remark, and we are all aware that we are living an historical moment for the European Union, and we feel the obligation to fulfill our responsibility of being a privileged generation. In our staff and our members, we come from all over Europe. We have only 2 things in common. We have done the Erasmus, and we come from a working class. So Europe was the best opportunity of our life, and we want to continue to make this opportunity highlighted and aware to all the European citizens, and that's how we can accomplish this with a responsibility by giving cheaper mortgages to the European citizens and help them to have an energy efficiency house that can help us to reduce pollution and to have a better world for our kids in the future. With this, I would like just to invite you to toast and to thank you, Vice President Dombrovskis, for being here tonight with us. And there is still a lot to do. We have to continue to work all together to find a better Europe. Thank you very much. Bon appétit.